So, hello viewers, presenting here one problem from income from business or profession chapter. Income from business or profession is computed by an SSC considering the various sections of Income Tax Act according to section 28 of Income Tax Act 1961 has given different types of income that are chargeable under the head income from business or profession. And section 29 says that while computing income from business profession, certain deduction is allowable. And the basic principle of a business income computing, keeping in mind that the expenses which are exclusively incurred for the purpose of business of SSCs, then these deductions are allowed while computing income from business. And section 30 to 37, from section 30 to 37, the various deductions are allowed from income of business while computing income from business. So one problems I have taken, it is on a screen. Who is proprietor of a business, his profit and loss account for the year ended, this one given. So this is the profit and loss account prepared, but this profit and loss account is not prepared as per Income Tax Act 1961. So this profit and loss account which is prepared without using the provision of Income Tax Act 1961, and the net profit which is given by this business is 2,80,840. This is not a correct profit as per Income Tax Act. Now there are certain expenses which are not allowable while computing business income, but that expenses are also deducted on the debit side of business, of on the debit side of profit and loss account. So this is the debit side and this is the credit side. So debit side means amount of expenses deducted, credit side means amount of income added. So when we, let us first talk about debit side. So these expenses, these establishment expenses exclusively for business purpose, and while computing income from business as per income tax point of view, expenses which are exclusively incurred for the purpose of business are allowable for deduction, and private or personal expenses of proprietor and anticipated expenses are not allowable for deduction. So this is the actual expenses which are incurred, these are debited. Now here establishment expenses, this is for business purpose, rent, rates, taxes, it is also incurred for business purpose. General charges, it is business expenses. Household expenses is not a business expenses. This is the personal expenses of SSC. So personal expenses of SSC is not allowed, but here it is debited 51,730. This amount is not allowable. This amount is not allowable to write here. Only business expenses and business income are to be debited and credited. All right. Now commission is the business expenses, so discount and allowance business expenses. So here provision for bad debts, it is not allowed. Provision Postage and charges, business expenses, allowable charges, law charges, allowable advertising for business purposes, fire insurance, business purposes, goods and service tax, good business purposes it is paid, so it is allowable. And now goods and service tax, and the next here is repairs and renewals not for business premises. It is not a business expenses. This is not allowed to debit, but it is debited. So, and a loss on sale of motor car used for private purposes, it is not allowed to debit, but it is debited, means amount deducted. Debited means amount deducted, it is not allowed. So those amount deducted we will add back, that is the disallowed expenses. And similarly interest on capital, this is the proprietor's interest on capital. So proprietor's interest on capital is not allowed as per income tax. And audit fee is allowed, business expenses. Interest on bank loan, it is allowed, business expenses. Loan is taken for purpose of business. Similarly, certain incomes are credited on income side, credit side, like here gross profit is a business income. Interest on government securities, it is not a business income, but it is added. And a rent from house property, it is not a business income, but it is added. So when we add it here, when we add it, so we will get the total figures. So 3,50,000 plus 5,400 plus 5,400, so total value 3,61,640. So out of this total income, all the debit expenses have been deducted, and the net profit which I told you that it is your 2,80,840, which is not a correct profit as from the income tax point of view. In the next page you see all those expenses are also there here. Provision for depreciation, it is a provision, not allowed. Provision for income tax, not allowed, but these are debited, means minus. So those expenses deducted, debited into profit and loss account, but income tax point of view this is disallowed, so we have to add back. And now adjustment, actual bad debts written off. So actual expenses which is happened, this is 550, but it is not recorded in profit and loss account debit side. Similarly, depreciation, actual depreciation as per income tax rule is 1700, but this is not recorded. This is not debited to profit and loss account. And one more here, income received rupees 2000, not credited to profit and loss account. So then we have to rectify that this is the net profit, this is given, this net profit 2,80,800 profit, this is not the correct profit from income tax point of view, so we have to correct it. This, so how, after giving the effect of those unallowable expenditures debited, we have to add back, and those unallowable income are added on credit side, that we have to deduct. Then the balance, after giving the effect of these three adjustment, then the profit which we get, that will be the income tax profit, and income tax point of view this profit is acceptable. Now here the solutions. Here net profit as per profit and loss account, we got it from the net profit account 2,80,840, and here expenses disallowed. As I told you that from income tax point of view these expenses are disallowed, but it is already debited to profit and loss account. So debited means minus, these are already deducted from the income, so we have to add back, that is expenses disallowed. Household expenses disallowed, provision for bad debts disallowed, repairs and renewal for business premises, not for business premises, it is not related to business premises, so disallowed. Loss on sale of motor car used for private purposes, not allowed. We use it is private purpose. Had it been a business purposes, then this could have been allowed, but it is a capital loss. Okay, life insurance premium, it is a personal life insurance premium, Mr. N, proprietor, it is personal expenses of proprietor is disallowed. Interest on capital, proprietor interest on capital, it is disallowed. Provision for depreciation, any provision, any amount set aside for happening of future event, this is not allowed. Similarly, provision for income tax, not allowed. So when we add all this item amount, total amount, so we get 64,640, and we adding with this figure 2,80,840 plus 3 lakh 3,45,480. So this 3 lakh 480, and now here add income not credited to profit and loss account. As per additional information number 3, this income supposed to be credited to profit and loss account but omitted to record. So this is the income we should add. So here add income not credited to profit and loss account. Discount received, adjustment is given, additional information. Discount received rupees 2,000 not credited to profit and loss account, means this 2,000 amount is not added, so we have to add. So this is 3,45,480 plus 2,000, 3,47,480. Now income less income not taxable under this head. Income not taxable under this head, while computing income from business, so we have to take only the business income and business expenses. So on the credit side of the questions, if you see on the credit side, this is from the income tax point of view, this is not in business income. So this income will come under the fifth head, that is income from other sources, and this income is not business income, but and this income will come under the head income from house property, second head of income. So but here randomly it is written on credit side, so it is means it is added, so these two items is added. Now these two items is added, so we have to deduct less, so here this is deducted. This is income not taxable. Here interest on government securities 5,400, rent from house property 5,000, total 10,800 minus it, so then 3,36,680. And as per the adjustment, income not debited to profit and loss account. So adjustment number 1 and number 2, bad debts is always allowable business expenses. Bad debts is always allowable as business expenses, but this is omitted to debit in the profit and loss account, so now we have to debit it. So that is bad debts return of 550. Similarly, depreciation is always allowable. Depreciation is a deductible while computing income from business, but this 1700 adjustment number 2, additional information number 2, it is not debited to profit and loss account, then we have to deduct to find out the correct profit. So 550 plus 1700, so 2250, my deduct from 3,36,680, so then balance is 3,34,430. This is the income from business. In this way, from the profit and loss account, which is prepared randomly and without following the income tax provision in certain cases, so then as per the income tax provisions we have to calculate the correct profit. So that means, so above profit and loss account given in the questions, we are rectifying and we are preparing as per income tax act provisions given. So here one brief notes I have provided here on the basis of this. So section 30 to 37 of income tax act provides for the deduction, that means from income, business income, deductions are allowed to be allowed while computing profit under the head business or profession. These expenses are given, the list of expenses, various expenses list are given under this section. Okay, and a business and deductions will be allowed in case of only those expenses which have been incurred for the purpose of SS's own business. that is SS's own business purposes. If expenses have been incurred, then it is to be deducted. Like here, motor car uh, motor car sold but used for private purpose. This is not in business loss. It is not allowable for deduction. Similarly, household expenses. This is the domestic expenses of proprietor, but it is debited to profit and loss account. This is the disallowed. This is not a considered as a business expense. So this is disallowed. Now again the second principle. This is the principle that expenditure which is deductible for income tax purpose is one which is towards a liability actually existing at the time, but putting aside a money which may become expenditure on the happening of an event is not expenditure and hence not deductible. So like this is talking about the provision for depreciation, provision for bad debt. So this type of for happening, for depreciation, for bad debts happening, this happening event, on happening event any expenditure is set aside, any amount is set aside, this type of amount is not allowable deduction. So if it is deducted, we have to add back, that is disallowed expenses. So under it we have written provision for depreciation, provision for bad debts. So provision for bad debts, provision for depreciation, and income tax to never allowed. Income tax is not allowed while computing business income. Okay, and here, so this expenditures which is the provisions, the provision amount disallowed because of based on this principle. On this basis of principle, that provision for bad debts, provision for depreciation is added. Now section 3, point number 3 notes is given. Section 37 subsection 1 states that expenses should not be in the nature of the personal expenses of the assessee. Personal expenses of the assessee, that is the household expenses, it is the personal expenses. Interest on capital, it is the personal expenses. And your life insurance premium, it is the personal expenses of the assessee. So this is disallowed. On the basis of this section 37 subsection 1, we added these personal expenses. Okay, and here what is said, expenses which are not relating to assessees on business are disallowed on the basis of these principles. Okay students, so you all of you watch it, like, comment and shares. Thank you very much.